All right, so right here is the DCP Roth conversion form. So this is the paperwork that you need to turn in if you're wanting to do a Roth conversion. Remember, Roth conversion is when you take money in your DCP account that's currently pre-tax, money you've never paid taxes on, and you're going to move it over into the Roth DCP side, which means I'm going to pay taxes on this money before I move it over. So this is the form to go ahead and do that. So first and foremost, make sure you read these bullet points. First one here is that you have to pay your income taxes yourself. So you basically have to make an estimated tax payment to the IRS. You can't have DRS withhold the tax payment from you. If you do this in a Roth IRA, you probably could have if you're over 60. DCP is taking the angle of we're not going to hold taxes regardless of your age. So make sure you have the funds sitting in your bank if you want to go ahead and make this payment. If you want to go ahead and make the conversion, and make sure you make the estimated payment. Second point, money has to be in DCP. That should be pretty obvious here. Third one, doing this is permanent. So once you turn this form in, that's it. The money's going to convert, and there's no takebacks. So if it completely destroys your taxes or causes some changes, there's no undo button here. They got rid of that a few years back. So top part, pretty straightforward. It's your information. Second here is where people kind of trip up. So you have to tell them if you are currently employed or separated. And then you want to say, am I doing the entire balance or just a portion of it? So depending on your tax situation, you want to go ahead and pick one of these two. 9 times out of 10, most people are doing partials, especially if they have large DCP accounts. So you go ahead and pick whatever this is, and you can either do a percentage or a dollar amount. Now, percentage in my mind doesn't make a ton of sense. I've only ever done dollar amounts with clients because this is a tax planning strategy and you want to dial it in. So if I have $15,000 of room before the next bracket, I want $15,000. I really don't like to do the math and figuring out what's $15,000. Is it 8.5% or 10%? It's just too weird. So personally, I encourage people to figure out what the actual dollar amount is. It makes it a lot easier, especially because your accounts are in the market. They're going to fluctuate. And if there's a lot of growth on there and you said, hey, we're doing 10%, you could convert more than you think, which means more taxes for you. So before you go ahead and do any kind of conversion, make sure you talk with a CPA or an advisor that's experienced in this field. Taxes, again, they're going to say you got to pay it yourself. And then you go ahead and sign on the bottom of this form. And then you're going to want to either fax or mail it in to them. So this is just the first step in doing the Roth conversion. Your next step after turning this in is go ahead and make an estimated tax payment.